The euro versus US dollar and pound versus US dollar higher. The dollar versus yen is also higher as the market reacts to the tariffs by President Trump on autos and the threat of new tariffs coming on Liberation Day on April 2nd. We'll go through the technicals off the price action that are driving the three major currency pairs in this video. So let's get started. I want to start by taking a look at the euro versus US dollar. Look at the hourly chart to focus on here. And over the last few days, I've been warning about this area down here as being a sort of a magnet area for the price action. If the price could continue its move to the downside, i.e. maybe stay below the 100-hour moving average, a blue line in this chart, move below the swing areas through here, including this one in trading yesterday, we moved below that level. And what we saw as the market reacted to the Trump 25% tariffs on autos was that the euro versus US dollar continued its move to the downside here, but we did ultimately find support against this dual technical level, the 200-day moving average and the 38.2% retracement. Buyers came against that level and pushed the price back to the upside, and as you can see, that move to the upside has not been able to get above this swing area right here with some problems up and down above it. But what we also found was that the other moving average, the 100-hour moving average, the one that we had to stay below, was also tested as it continues to move to the downside. The level comes in at 1.07985, just below the 108 level, natural resistance level there. So the battle is on between this area down here where the 200-day moving average is 38.2% retracement of this move to the upside, and the 100-hour moving average right here. The market will decide one way or the other at some point, or either break above it and look toward the 200-hour moving average up here, or stay below it and rotate back down and see what happens if the price ultimately moves back down toward the 200-day moving average, toward the 38.2% retracement. Let's look at the dollar versus yen next. And that currency pair initially moved to the downside, but as you can see, we once again moved close to the 100-hour moving average. We did so right here. We broke above it right here, but coming down toward that 100-hour moving average in this swing area, found support buyers in the Asian session. We started to rotate back to the upside. What seems to be Japan responded to the tariffs saying that they are going to likely hurt the economy, and that may take away the prospects of a Bank of Japan interest rate cut, which should, or rate rise, I should say, that would in effect weaken the yen. Would be the course of action. Perhaps that's what we're seeing, in addition to the technicals that are that found the support against the 100-hour moving average. So clearly, sellers turned to buyers right here at the 100-hour moving average, rotated back to the upside. And we are making new highs for the week in the process. So the buyers are in control. And then we look toward this level up here. This level is home to the 38.2% retracement and other swing areas going back in time, and it probably goes back even further back here. But as you can see, the swing area was defined initially by a bunch of different swing lows right here, forming a floor. The rebounds got progressively lower through here, and then we ultimately broke through the floor. We came back, retested that old floor, which is now a ceiling, and now we're moving back toward that area between 151.19 and 151.34. Within that area is the 38.2% retracement of the move down from the high price going back in time here. Well, I'll look at the 4-hour chart just to show you where that comes from. If you look at the go back to this high right here, which is in January, to the low price that we had in March. So the range for the year, 38.2 comes in 151.249. You can see the importance of this swing area going back even further through here off this 4-hour chart. So be aware of that as we head toward that level, like the support in the euro versus US dollar. This level should be a tough nut to crack on the first test, so look for sellers against that level on a test. Finally, let's take a look at the sterling versus US dollar. I'll look at the 4-hour chart. We focused on breaking below the 100-bar moving average yesterday right here, and we stayed below that level, moving down further off of that move into today's trading. I'll go to the hourly chart, and you can see how the break in early trading really didn't last very long. We started to rotate back to the upside, The 100-hour moving average was tested up here. We moved down and then moved back above it. The 200-hour moving average is the next key target on the top side. That level comes in at 1.2949. I'm putting the Fibonacci in from the high to the low. Well, right now we're testing the 50% retracement at 41. The 200-hour moving average comes in at 49. So this is a resistance zone for today's trading. If we move above it, it's more bullish. If we stay below it, then the bias, this is a corrective move, I guess, in a shorter term move to the downside. But the move to the downside really wasn't that strong as seen by the 4-hour chart. So be aware. The market seems to be a little bit unsure about that, but we are back above the 100-bar moving average on the 4-hour chart, which is also a positive thing. Testing the 50%, have the 100-hour moving average on the top side. So there you have it, a look at 3 major currency pairs. Kickstart your trading day. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.